How's it going, guys? And welcome to the fifth video in a six-part series on price action. We did a poll on Twitter, and you guys asked me to do a video on moving averages, so that's what we're going to be covering today. I do apologize for taking so long to get the video out, but I have been a little bit under the weather, and I had a whole bunch of stuff going on. And then just before we do get into it, a couple of you guys said that you can't really see the chart that well. So what I've done is I've just changed up the colors, and it's obviously going to allow the moving averages to stick out quite a bit more. If you like it, I'll continue charting on this. If you guys don't like it, just let me know and I'll change back to my original. But yeah, let's get into it. So I'm going to be charting Ethereum basically because the last one we did call the top on Ethereum, and because I've been accumulating a lot of Ethereum on F alts and F pairs, yeah, this is obviously a chart that interests me. So let's get straight into it. I'm going to show you guys an exponential moving average, and let me just show you the difference and why I don't like using just the normal moving average. So let's just get this. We'll also do it on 100, also taking the close into account, and then let's just change the color so that you can see the difference. All right, cool. All right, so the yellow one is the moving average, and as you can see, the yellow one is a little bit slower than the blue one. Now the reason is a simple moving average. What they do is they take, and I mean we're using 100 closes here, so they take every price at its close for the last 100 candles, they add them all up, and then they divide by 100, and then that prints this moving average line. But it's a little bit slow, so I don't like using it, especially in crypto. So I like using the EMA. Now the EMA, the only difference is it's the exponential moving average, and what they do is they just give the newest price more of a weight, right? So you can actually see the momentum a little bit better because it's not lagging. So the newest prices are actually weighing more into the movement of this moving average, right? So that's why I like using it. Now I don't use it as like a secret trading thing or secret trading tool, but what I do is I like kind of just understanding the trend with it. So my favorite is the 100, and I'll take you guys through the 50 and the 200, but my favorite is the 100, and purely because it doesn't matter on what time chart you open it, the same rule applies. If price is above it, we're bullish. If price is below it, we're bearish. And I mean, that's pretty much straightforward. And you can see it on any time chart or time frame that you're using. Just remember, obviously, the higher the time frame, like I always say, I mean, the more weighting you can give to the actual trend. So basically, when price is really above it, we are super bullish. Then when price gets close to it, we're kind of like accumulating or just ranging, and then when price goes below it, we're in a bearish market. Okay, and I mean you can see it. Here was a low, here's a lower low, and then there's another even lower low. So that's where the market actually becomes bearish. When we're bullish, we've got a low, and then we've got higher lows. So I mean currently I would say we are bullish. But there are a few things that like start screaming at me. So I've just drawn in a few support zones, and what you can see is that this 100 is moving into that support zone. So what I try to do is I just try to find confluence in what I'm seeing on the charts and what I see with my indicators. So let me just get the 50 on and the 200 on. Okay, now the way that I use them, guys, the 50 I use as my short-term trend, the 100 I use as my medium-term trend, and the 200 I use as my long-term trend. So what I like doing is I just like throwing scenarios around. So I mean, when we above the 50, above the 100, and above the 200, we're super bullish, right? When the market does correct, the 200 has kept it up in this bull market, and that's normally, a sign that you are very bullish when price bounces off that 200. When price doesn't bounce off the 200 like you want it to, price closes below it, that kind of tells you that the bullish trend has now changed and it's going bearish. Okay, same as when price then starts closing above it. You start looking for indicators, just to give you a bit of confluence. So I like using volume with all of that. And I mean, it's very clear to see here we were in quite a bullish market. 200 had given us some support there, volume was still high. And the minute that we kind of get really close to the 200 and we've got low volume, it starts telling you, be careful, we're heading for a bear market, right? Also, when we are close to the 200 and volume starts increasing, that kind of tells you, guys, we've come out of that trend long term, and we are going into a bull market, which, I mean, this was from last year until this year. I mean, so it did really change bullish, right? Now we did go through a little consolidation zone here where price, broke through the 50. It's supported by the 200, so we're still, bullish. But we are consolidating. We got close to the 100. Volume was still high, and then volume got a little bit lower. And then here you can actually start seeing that volume is increasing, so we are looking bullish. We are still above the 50, but things don't look as strong as they could be. So this is where I start looking, like price is coming closer to that 50 moving average. The 50 moving average is kind of, bending over. The 100 is coming into the support zone. So a lot of things are screaming at me that, price is probably going to be coming into the zone pretty soon. If we look at that on a 12-hour, 12-hour price currently is just above the 50. The medium-term trend on the 12-hour is that, price might be moving sideways. Volume's not really increasing. And the 200 on the 12 hours also coming into this area. So, price will start converging. And then as you start going down on lower time frames, you guys will see what I mean. I mean, they're really getting close to each other. Now, what a lot of the traders do, the guys do look for these crosses. So when the 50 crosses through the 100, they can go short. It's a cool strategy. It does work for some people. I don't use it. Like I said, I just use the EMAs with confluence of volume and confluence of, certain areas, certain resistance and support areas. As soon as they're showing confluence, that's when I start getting confident in a trade. So price has come into this zone where it has shown quite a lot of resistance. The 200 did support it. Okay, even on the 6-hour, the 200 did support it. So we do have we're still in a bullish uptrend, but things are starting to show me that we might be going into consolidation. We've got lower volume. We're kind of between a major resistance area and a major support area. We've printed a higher high, then we've printed a lower high. This 6-hour might close a doji, and I mean dojis, especially on Ethereum. I look at that doji, and I mean if we get another doji here, I've got a good feeling that price would be coming down into this area. So it's not alarm bells yet, but what does go through my mind is that we might start seeing a bit of a consolidation zone, especially between this range. And I mean the daily, the 200 is broken above here, So I don't see us, coming all the way back down to 415. But we can, once price catches up with that 50, and the momentum's kind of slowing down without any volume, you could then probably see that, coming into this support zone. So I'd be looking here to open a long trade, anything from about 790. And yeah, I mean, that's pretty much it. That's how I use exponential moving averages. So yeah, guys, come check us out. Join us on our classroom discussions and on our technical analysis setups at the Crypto Cartel. The link is in my bio. And if you guys enjoyed the video, please like, share, and tell mates to go check it out. And I'll continue doing them. So yeah, that's it. Hope you guys enjoy. Catch you soon. Peace.